Hey, good morning, everyone. This is Sri. Today I'm going to talk about the strategic entrepreneurship. Okay, let's get started. So, agenda for today is introduction and the Timmons model of entrepreneurial process. Identify and screen the opportunities, business plan, market research needs and results, and what are the techniques and teams and structures, and the financial planning, funding for the ventures, SWOT analysis, and finally sustainability, and then conclusion. Okay, let's get into the details. So, introduction. So, one of the thing we notice is most of the startup ventures, 90% of the startup ventures fail within the first 5 years. And if you look at what is the top 20 reasons why the startups fails, here you can see there are various reasons. No market need, ran out of cash, and not having right team. So there are the various reasons the startup can fail. So, in order to create a startup successfully and grow it and sustain it successfully, there are various things needs to be aligned. That is what we are going to see in today's presentation. So consider, for example, in your neighborhood area, somebody is planning to open a business. What are the things they need to do? So we will cover in this. So before we get started with anything, the first thing is if you're planning to start a startup, the first thing is the founder should have an entrepreneurial mindset, which is basically they should have the creativity, innovation, passion, and persistence, resiliency, flexibility, risk taking, and finally resourceful. All these qualities are needed because entrepreneurial process and the whole process is not an easy thing, and especially it needs a lot of persistence. It's not going to be all the time you will win in all the scenarios, and it is also a risk taking, right? There is always, when you have high returns, there is always a high risk as well. Moving on. So, Timmons' model of entrepreneurial process. So, Timmons, he explains what are the three major things in a triangle which needs to be balanced for any new startup business. The first one is opportunity. The second one is resources. The third one is team. So, opportunity, identifying the idea and turning them into an opportunity is very critical and crucial part. The second is resources, aligning the resources which is needed for that opportunity is another big thing. And finally, all of this relies on the team, which is the fundamental to them. It's basically team includes the founder and the team, which is fundamental to all these things. Without having a team, you won't be able to pull it through. Meaning, without having a strong team, you won't be able to pull it through. So basically, he explains how it is critical to have all these three balanced and aligned. And also, if you want to sustain it, right, how we wanted to sustain it, it needs to be balanced. So let's start with the opportunity. So, first thing is, how do we identify opportunity? So, whenever we see a customer problem or a change or chaos or discontinuity, that is the starting point of the opportunity. So, you need to turn the problem into an idea. So, an idea is not an opportunity. The idea needs to be turned into an opportunity. Idea may be a good opportunity, it may not be. So, that needs to be evaluated and that needs to be weighed. So, how do we identify an idea whether it is a viable opportunity, right, or profitable opportunity? So, the first thing is um, we need to we need to evaluate the significant value, how much it adds to the customer. The second is what is the market problem it addresses and how it gives competitive advantage to the other products. The third is market growth, margin, and profitability characteristics, how this idea can generate. And finally, the team collective expertise. So here, um, so in the design thinking process, there is a way to evaluate the whether the idea can be a good opportunity. For example, it's called real, win, worth it. Real, is a market real? Is a people desirable? Is the product desirable? Is a product real? And the win is, can the product be competitive? Can the company be competitive? Is it business viable? Right? The third one is worth it. Is that basically, does launching financially make sense? Will there be return on investments at an acceptable risk? And technically feasible. So basically, real is people desirable, win is whether it is technically feasible, and finally, the worth it is whether business viable. So when all these three aligns, then only a idea can be turned into an opportunity. The next is business model and planning. So consider you have the idea according to all these criteria, it is a valid opportunity. So the next thing is identifying the appropriate business model and the plan. So you can apply the design thinking to the business model and the plan. So business model is primarily evaluating, applying various these things. I will go through that various these things and validating, okay, whether it can again generate a profitable business. And in the plan is primarily a documentation of that. So in the business plan, you will describe primary sections are the executive summary, which will detail the business opportunity and the projections, teams, and offerings. The second is what is the industry, product, services. And the third thing is basically the market research analysis. It is important to do the market research analysis because that is the number one reason many products fail. There is no market need if you develop a product without knowing whether it is really needed for the market, which includes competitive advantage analysis, market size, trend analysis, etc. Fourth is economics of the business, which is pricing, basically pricing of the product, margins, break-even analysis, etc. And then eventually the marketing plan, how the sales strategy, distribution, advertisement all are performed, and the development plan, how the product is developed or services being developed, what are the risks, issues in that, and then manufacturing and operating. It depends on the product, right? Some products may have the manufacturing need. In that case, all those manufacturing facilities, assets, we need to be validated, and operating cycle and expenses needs to be validated and analyzed as well. The next continuation, so and in addition to that, the management team needs to be included as well in the plan because they are one of the fundamental things in the Timmons model. Founders, investors, board of directors, and also the structure of the organization. And finally, how to sustain this business growth and sustainability, and also the impact to the environment and the community. Moving on, so apart from that, the financial planning needs to be included as well, which primarily encompasses the income statement, balance sheet, cash flow, break even analysis, etc. And finally, the operating risk and the mitigation for that needs to be added as well. And once we gather all these, we understand that how much funding is needed as well, and what are the various sources of funding and how to fund that. That needs to be documented as well. And finally, the harvest strategy or exit strategy, as many of the venture capitalists will be interested in how can they gain profit and take their profit out as well after a certain period. Okay, first, market research. So, what is market research? Primarily understanding the customer needs, right? And validating the sales and profit potential of the product or the service. And also, it helps when we do the market research, it helps to build the right product or service. And also, it can help to scale the business as well. And this is one of the fundamental need for the success of the startup. So when we do the market research analysis, what are the things which will result, or what are the details we will gather? The customer segments, we will analyze the customer segments, what are the various categories of customer and their interest, and the target audience, who are we targeting with this product or service, market size, customer interest, trend analysis. What is the market trend? Whether this product is going to be more profitable eventually. Price effectiveness, promotion effectiveness, and finally the customer satisfaction. To do this market research, there are various techniques available, and you need to gather the data. Primarily, it's a primary data as well as the secondary data. So data need to be collected, and there are various methods and techniques available for gathering the data as well. And when analyzing that data, right, qualitative and quantitative research can be performed as well. So here you can see there are various different ways and techniques for gathering and analyzing those data. And some of them are, for example, qualitative is more about gathering the numbers in high level, right? So it's about mobile surveys, social media surveys, online surveys. Whereas quantitative research is more of interview based. You have focus groups or in person interviews, etc. Okay, so the next is the team and the structure. Around 23% of the startups fail because they are not having the right team. The team includes the founders, investors, trusted employees, VCs, and board of directors. The founders will have the should have the entrepreneurial competencies, which is the vision, problem solving, creativity, influencing, decision making, communication, leading teams, and finance management. And finally, the optimism. The optimism is the boost for the team. So, apart from the entrepreneurs having all these competencies, the team needs to be built in such a way it can perform efficiently as well. So, when forming and building a team, it is important to consider some of the things. Slice the founder's pie, basically, reward the team with equity when they are performing. And similarly, fairness concept. Make sure there is a chemistry between the team and team members, and there is a empathy being practiced. Apart from that, it is important as the team grows, it is important to identify and understand the collective cognition, and that decides the success. And finally, the startups with the flat structure innovate more compared to the one corporate with hierarchical structure. Okay, so the next is the financial planning. So when you are doing the financial planning, it is important to consider some of the things. The first one is the profit margin, the markup price of the product, how you want to price your product among the competition. And when you're developing a product, what is the fixed cost as the foundation you need to add? And what is the operating eventual cost you need to add? So based on the fixed cost and variable cost, you can determine the break-even analysis. Many times if you have a low fixed cost, the break-even can be achieved sooner, but after a certain point, the growth can be harder. So it is important to balance the fixed cost versus the variable cost. And the break-even point is where you're turning the loss into a profit. And the capital budgeting can be evaluated using three things. One is the payback period, internal rate of return, and the net present value. So the net present value can give the details about profitability of the investment. So these can be calculated using the formula given over here. So this is a break-even analysis. Using this formula can be calculated, and net present value can be calculated using this formula. So continuing the financial planning. So apart from calculating the break-even analysis, it is important to do the analysis and also do the projections for the income statement, balance sheet, and the cash flow. So basically, the income statement will have the details of all the sales and the COGS and the expenses, and finally, it will provide the net income or profit. And the balance sheet, which provides basically the assets, the liabilities, and finally the owner's equity. So the income statement, even though it provides net income, it does not provide the cash, which is really flowing. So in order to calculate that, the cash flow analysis has to be done. So, for the success of the business or to run the business efficiently, it is important to have the appropriate cash flow as well. So it is important to have all these financial statement. It would give good information about the planning and also how to secure the funds for that. The next is return on equity. Primarily, it would provide how much equity is we can gain, and similarly, the return on investment. So apart from that, the all these provides accounting profit related information. So apart from accounting profit, it is also important to consider the entrepreneurial profit as well, which is the profit considering the opportunity cost. So funding the venture, as we finish the financial planning, you need to fund the venture with appropriate funds and from various sources. And the funding differs during the various stages of the startups. During the initial R&D stage, bootstrapping and crowdfunding can be leveraged. And eventually, during the seed funding, angel investors and seed funds can be leveraged. And during this period, it's primarily loss. It may not be a profit. So this is called a valley of death. And after the break even is achieved, you can expect some of the profits. And then during the next stage is the launch stage. And in that stage, venture capitalist can provide funds. And there are different kinds of series A, B, C, and funding can be available. And you can grow further, or some of the business they may take the harvest to the profits as well. So either IPO can be achieved and grow further, or M&A or refinancing or buyouts can be done to harvest the benefits. And the funding strategies for success, which includes secure multiple sources of funding, retain the entrepreneur voting control even though the VCs fund, do multiple rounds of funding, and use the funds frugally and efficiently, plan, harvest, and exit strategy. IPOs, basically, this includes IPOs, mergers, acquisitions, refinancing, buyouts, and liquidation. And finally, during all these things, you may need to do the valuation techniques as well. And one of the commonly used valuation technique is discounted cash flow and book value method. And finally, the SWOT analysis need to be done. It is better to understand the team, business, and develop new strategies to compensate the weaknesses and threats. So strengths need to be analyzed. Basically, what the business and team are good at, how good is the customer base, and what's the differentiator. In the weakness, basically the team and the business, how they are lacking, and what is hindering the product development. And in the opportunities, how to leverage the current trends. And threats are more around like competitors or what are the unforeseen changes. So primarily this SWOT analysis is done to reduce the risk and improve the performance and also gain the competitive strategy. So after analyzing all these, the strategies needs to be formed. Primarily, you can combine the strength with opportunity to create a competitive product, and you can use the strength to minimize the threat, and you can use the opportunities to overcome the weakness. You can use a strategy, create strategy to minimize the weakness and avoid threat. And finally, sustainability based on the market impact and mission. The for social ventures, it can be classified. Generally, the ventures can be classified into four different categories. It's traditional, enterprising, non-profit, or social consequence, or social purpose. It depends on the mission and impact. Apart from these, to sustain the business, it is also a responsibility to protect the environment as well, and also what we give it to the society. Conclusion finally. So, starting, scaling, and sustaining the business is a challenge, and it requires a lot of dedication, strategic planning, entrepreneurial mindset. So, it's important to align the opportunity, team, and resources. So, plan the business model to make sure all the analysis has been done and profitability has been analyzed and validated as well. And document the business plan, perform the market research, financial planning, and sustainability. So, here are the references which have been used in the earlier slides, and here are the further references which have been used again, and here are furthermore references. And thank you once again for listening.